welcome to the chat. So let's get straight into it.
Right.
We have a normal tradition. We always ask, the people we are interviewing to introduce themselves. So the typical question would be, who is Mr. Toyin? What type of investment banker are you? So you're just going to summarize for us what type of investment banker you are and who you are outside the investment banking area.
Oh, outside my professional, or let me say corporate job, right? Good. Well, Toyin Folorunso is an indigene of Osogbo. He is from Osun State. He had his first degree at Affairs University, where I studied economics combined with education. And I graduated just 3 years ago. And that's just for that. So basically, what stemmed my interests from financial services industry, investment banking, or asset management basically could be dated back to the course I studied. Some of the engagement I had back then when I was in school, and some of the circle that I keep, and of course, some of the mentors that I have there. So there was this program you usually have, it's an annual program organized by us then. And I was part of at least 2 editions, not just as an attendee, but a planner. So that program kind of gives me a kind of outlook and a focus as to what exactly do I want to do with my career. So there was this speaker that came. He actually finished from the department too, and his name is Paul Alaje. So he was advising us then as an undergraduate, careers that many of you will probably, because there seems to be this growing concern among the economic student then. An average accounting student have an idea of what to do when you leave school. You want to be an accountant and all that. But economics, you just feel like, okay, you can work almost everywhere. But no, it's the narrative is changing. There seems to be a narrowed industry where most of us are fitting now. And there's no place than that financial services industry where we have investment banking. So that was where I practically got my interest in. But then I like microeconomics a lot. I love to know what is happening within my country, my environment, world at large. And of course, this is an industry that is knowledge-based. So it's an industry that allows you to explore more, it pushes you, it allows you to do so much things with yourself and capacity building. So aside my corporate job, actually, I'm a socialite. Yeah, let me put it that way. I'm more into social media. Yes. I do a lot of social media commentator. And aside that, I'm a public affairs analyst. And if I'm not mistaken, I've appeared at least nothing less than 5 to 10 times on the national TVs on different occasions to come and dissect issues around socio-political economy. And I could recall the famous one that a lot of people started saying that, oh, who is this young man and all that. I think that happened around 2019 when the federal government arrested Omoyele Sowore. So that day, when the news was all over everywhere in Nigeria, I was called by that same studio. They're on DSTV actually, their name is Sport TV, to come and do analysis as to what is my view based on the steps that the federal government is taking. Sure. So those are the things I do aside my corporate job. Then I'm an entrepreneur. Yes, I spot opportunities. I try to, my little savings or investment that I have in this little time of mine in this industry, I try to do something with it. So that's what I do basically. Yeah, thanks.
That's a really interesting life story there. So let me just ask this: how would you describe the banking industry in Nigeria today?
So do you mean investment banking or banking industry? Because the space where I play is financial services, which is basically the investment banking and funds management.
So let's narrow it down to the investment banking sector.
God bless you.
So to keep it to your specialty, so let's get it to
that. Exactly. Yeah. So really, many people still do not understand the concept behind investment banking. Thanks to you guys, I was telling one of your team member when we were having conversation during the course of bringing me on board to this show, that I kind of have you guys notification on my system, even whenever I'm at work. Your news keeps popping up, and there are sometimes you carry news that has to do with the industry, and your analysis, your conk analysis on the industry knowledge is commendable. So what does this mean? You guys are giving insights to the populace that we are trying to reach out to even educate. And of course, you guys have really helped the industry in terms of literacy as well. So the industry is quite broad. So from that same industry, we're talking about the funds manager. Yeah, so we're talking about those asset management guys that oversees the mutual funds, the balance funds, and other equity-based funds. Then we're talking about the PFAs too. Sorry, we're talking about investment bankers proper, that is those that do issuing houses, those that do M&A, that is merger and acquisitions, those that helps both corporate and government to raise funds or probably finance the projects. And of course, we have the regulators too. Yes, in that space, we're talking about the trustees as well. So in all of this, investment banking is so broad. Narrow it down, in the couple of years, there seems to be a lot of improvement in the industry. Because like I told you during the course of introducing myself, the industry is a knowledge-based industry. And information is very key in the industry, and so also the network. So basically, the hypothetical example I will cite could be dated back to our normal elementary economics and commerce trading. So we have the buyer, we have the seller. So there are people who have the available capital, who are looking for opportunities where to put those funds. And then there are people who are in need of those funds. So what we do basically is to provide a platform for those who have the capital available and those who are in need of capital. So say government wants to finance a project. Last year, Lagos State government raised a bond. It's on the news. You guys also carried it. So it's an investment banking house that will prepare all the necessary documents, come up with the whole integrity and things that needs to be done around that. So essentially, it's a broad industry, but which could be tailored down to funds management and all of that. So then also, there is something that has been happening lately. So we have many investment banking coming up. And what this does for the industry is to give an insight. What they are trying to do is just to create a niche for themselves, basically, nothing more. Because like I said, you get to realize that this thing is just a circle. So the more the circle expands, the more it's easier for you. And do not forget, during the course of me just trying to make it to be simple as possible, I tried to make case for the issue of buyer and the seller, where I said those who have the capital, who are looking for opportunity, and those who need the capital to run a project. So the more players in that industry, the more powerful, the more expand, the more wider the industry would be. So yeah, I would say the industry is still growing, but really, if you ask me, in the last 5 years, where it was and where it is now, there seems to be a lot of improvement. Yes.
Okay, so I heard you say something about mergers and acquisitions, and you also spoke about quite a number of things within this investment banking sector. The question someone will ask is, what are the risks involved? Because if you're trying, especially in Nigeria, so people are wondering, we've seen the ease of doing business and all those other indices in Nigeria. So the question I would want to throw to you is, what are the risks of investing in Nigeria?
Well, thank you for that question, David. Actually, the risk involved is actually diverse, and I would do justice on two things. We have fundamental risk, actually. A risk that they are not even directly under our control in the industry. these are fundamental risk. Talking about the issue of security, you get. So you imagine that we spot an opportunity or we try to raise funds for one agro-allied company, and then in between, you all know what is happening between the cattle rearers and the farmers now. And you imagine that a company which an investment banking firm probably helped to raise the fund, whether in bond or debt or in equity, and something happened in that process. So that's a fundamental risk. Such risk is associated to security, and that one is not even directly under control of anybody at all. The other thing is we seem to be struggling a lot with our policies. And of course, you will agree with me in recent time, especially in the last 18 months, there seems to be a lot of policies changes, somersault from our MPC guys. And you just wake up, you see that other policies, yeah, especially on our FX. So all of these things tells on the risks that we have. But on the industry base, so the risk that many people that we are trying to raise funds for, or those that we are trying to spot opportunity for, still revolves around the economy. And like I said, all of this can still be, revolves or probably tilt towards the fundamental risk that I talked about. So you raise funds for people, policy comes, then there is a lot of struggle, especially when the portfolio that is structured has to do with foreign currency, then it becomes a problem. Last year alone, sometimes around August or September, you agree with me, when CBN suddenly wakes up that now the BGC can then have access to the FX. That tells on something within that industry. So all of these, when we put them together in the bucket, it forms a larger chunk of our problem. Then the ease of doing business too is actually a risk. And in the last 18 months, yes, that's over a year, we are struggling a lot with our FPI guys, that is for foreign portfolio investors. So all of these, they try to assess how is the investment atmosphere, the rate and all of that. They put all of these things together and then they form their opinion. So the risks are fundamentals. Many of it are not actually under our control. But the ones that are under our control requires you to be very professional and of course have the industry knowledge and spot opportunity whenever needed through accurate information and right network.
Thank you. That's I'm trying to process all of that. Well, look, in all of this that we've said, there's one major problem that we cannot hide from, and that's COVID-19. And this thing turned us upside down 2020. Of course, every single sector, every country has been badly hit. And but in particular, the investment banking side of things, how bad have we been hit in Nigeria? So how bad has this pandemic affected investment banking within Nigeria and, if you may, outside Nigeria, around whether it's Africa or globally? How bad are we looking at this thing?
Well, the question is, that question you just asked has a lot of key issues around it, but I will try and be brief. Yeah. First of all, the issue of pandemic, it's a new normal, because at one point in 2020, especially starting from the second quarter, a lot of us will wake up to that reality. Though it was shock, we thought what was happening in China was just for them. Before the world could wake up, it's already late. So we enter new normal, and since that time to very now, we are struggling. So how does it affect? See, let's address its issues and for. We are just an entity, the industry is just an entity within the economy. And what we deal with is funds, especially the aspect of investment banking where I play, that is the funds management, financial advisory, investment advisory, try to spot opportunity for both individuals, governments, and corporates. it becomes more difficult because there seems to be a shrink in income distribution. We are talking about the income that wasn't there in the first place that we are struggling with. Then there seems to be a very slowdown in the activities in the economy. So pandemic led us to recession. I mean, in Q2 2020, we recorded negative growth in our GDP of 6.1% negative. It didn't stop there. The following quarter, too, which is third quarter, we still recorded negative GDP growth, but not as much as the previous quarter. So we're talking about 3.62%. So all of these kind of dovetails to why we enter recession. Of course, the figure or the reports for Q4 will be held by next month, and all of us will know where we are. So all of these things are fundamental issues. Not just that. You and I know where Nigeria we normally get our FX from, what we use to support our budgets, what we use to create something within the economy is our oil sector. And the oil GDP really, something actually hit us there. So the oil GDP in Q3 2020 recorded a negative growth of 1.3.9%, owing to the decline in the crude oil production of 18.1%. I mean, we are talking about an economy that was struggling before we even entered 2020. There seems to be a path to growth when we finish Q4 2019. And all of us were hoping to it that this year should be a better year. In fact, sometimes around that 2019, rates in fixed income markets still offering around 10 to 11%, and our inflation was still around 12% thereabout. Even though we're recording, how do I put this? Even though each individual investors were still not getting real value in their real return in their investment, at least it's still something moderate. Because by the time you net that off, the real return from what inflation is talking about, they are not really worse off compared to now. So there were decline in where we are getting our revenue from, oil sector. Then we have non-oil GDP, which we are talking about our services. We're talking about manufacturing, we're talking about agriculture, we're talking about a lot of things that host to this. All of these kind of form a compound problem that actually brought us to the situation where we found ourselves. So in non-oil sector, we went to lockdown around April, May. So the sectors, or let me say the industry that requires people to have contact before they could make an ends meet, they were badly battered. For services industry, especially the telecom and then of course banking to some extent, they still keep on continuing on that ride. But you agree with me that manufacturing at least control a larger portion or percentage of our economy as of today. You agree with me? In fact, the informal sector alone that the government asked to sit at home due to the pandemic and because of their own health, cover at least 41% of our GDP. And it employs 53% of our Nigerian active labor force. So these are fundamental issues. So how does pandemic affect the industry? Is in two ways. So the investors that you are trying to reach out to, they have shortfall in their revenue. From the lower rated end, the individuals you are trying to do a financial literacy for, that Mr. A, Mr. B, okay, come and do something with your income. That is the income you have after you might have paid your tax. Come and do something with it. Try to have a clear distinction between the word savings and investment. Try to create a path for yourself for future. Then Mr. A tells you that I just lost my job. Mr. B told you that the business that I had, a lot of people are not patronizing me, owing to the fact that the income level within the economy and income distribution is low. All of this to dovetail to our industry, many other industry, even your industry, because to access your website, I need to have data. So many things, it's a system, it's a wholeness of body. If something happens to the eyes, the nose feels it. If something happens to the legs, the shoulder feels it, and all of that. So really, right now, the industry levels on technology the most. We've reduced the contact at which you have with clients, make use of technology and all of that. But really, the recessions that the country itself went through sort of affect the business as well, the industry.
Thank you very much. So, in terms of asset classes,
Okay.
this is something else that I've been thinking about. What are the most attractive forms of asset classes for Nigerian investment banking?
Well, asset classes are relative actually, but we just speak to what you and I we can probably relate with fundamentally.
Yes.
So in investment banking, we have, even when we approach either individual investors or institutional investors or even PFAs or anybody within the economy that have the capacity to do something with us, we have our underlying assets. We have things that when we take money or funds from anybody within the economy or in society, that is a purpose of which such monies are designed for. So basically, we have different tiers. We have debt. Then in debt, we're talking about the bond space. That's a very more secured space because of regulation, because of the regulators and all of that. Then we have the equity, where individuals just want to have a stake in your company. They are not telling you that, okay, I'm giving you this money in front of you. No, I want to buy into the equity of your company. Let me see your balance sheet. Let us share the profit at the end of the given period. Then we have the notes. So notes usually it's for the medium-sized firm, but it's a little bit risky because then that doesn't really involve most of these regulators. So we just try to make an arrangement between those who have the available capital and those who really want to use it to expand their business. So what we probably do is just to enter a mutual understanding and agreement. But of course, some legal backings will be there. Then we have what we call Missouri financing and project financing and all of that. So right now, they are attractive, just to drill it down to your question right now, to speak to reality. The most attractive asset class right now as we speak in Nigeria will be the equity. I mean, I normally cite a scenario for some people whenever I'm having this kind of discussion. There seems to be an inverse relationship between the equity market and the fixed income market. So some fundamentalists usually do argue that, actually. But I tell people there seems to be an inverse relationship. Check it. In year 2018, when the fixed income space, talking about treasury bill money markets, when they were returning close to 20%, say around above 15%, what was equity during that time? It was down, even up to 2019. Now equity year-to-date equity market has returned on the positive side. And what is the fixed income space doing? So the most attractive asset class right now will be for the equities. And of course, many institutional investors and individual investors, they are taking position right now. And what does this mean? They are waiting for when these companies will be paying their dividend. And that is the situation where we are now. So in all of the bonds that their yields are not really attractive right now, in all of the notes that many companies are still struggling, in many of the projects that many companies are actually pegging it down, the equity space is where a lot of people are actually playing. And last year, Time Magazine and Wall Street Journal in New York City actually released a report that Nigeria equity markets had a bullish run. In fact, we are in top 5 throughout the world of the stock market to look out for. So that sort of, shift the idea of many individual investors and institutions to that space. So the asset class that is very attractive right now is the equities. Though most lately, if if you check what money market is returning, there seems to be an upward movement, positive. I think it's still going to around 2%, depending on the company you are investing with. So it's equity based on the economic reality and where we find ourselves.
Right, so you have this experience and knowledge in investment banking, and then it's natural that I'll throw this question to you as our final question. What do you think will be the impact of digital currencies and blockchain in the investment banking landscape?
So, thank you for that question. You see, what I will say about cryptocurrency, that is the digital currency, like you said, we have many of them around now, but the popular one is Bitcoin. I call it the millennials' assets. You hardly see a 50 years old man, even for some 40 years old guys too, they are very conservative, not to even talk of 60 years old man. Many of them doesn't really play in this space. But we millennials, we have a way of influencing our parents right now. There seems to be that gap balancing, and where we just try to let them know, so Sam, you just have to trust us. So the impact it has right now, first of all, I would just say that this is a space that we cannot ignore. This is a space that for every 100 is too much. I don't want to say 10. For every 20 millennials that you gather who are probably informed, who have access to basic technology tools, and of course, who are social media savvy, would definitely know what digital currency is all about. So the information in that space is like a widespread to what this is, despite the fact that the space is very volatile. But the good thing is that the SEC, Securities and Exchange Commission, actually released a review on that. I still read it on your website sometimes around last year when you guys picked up that news, that they are trying to come up with some regulations to look into that space. But really, why it won't really have much effect on investment banking space right now will be that the major fund holders, the major players in Nigeria capital market industry are the funds manager who are probably managing monies that run into billions. We are talking about the PFAs, we are talking about institutional investors who would rather stick to their traditional ways of investing funds than they go into, blockchains and all of that they are still trying to understand the dynamics. So really, maybe in the long run, we might, when SEC probably come up with their policies or regulation, there can then be a conventional way of doing things. See, right now, Nigeria, the total amount that Nigeria has in pension assets is around 10 trillion naira. So let's say PFA decided to give 1 to 5% of the total funds under their AUM. They just want to, at least asset allocation, they want to allocate 5% of their total assets into that. That will give us a 500 billion. 500 billion to digital currency markets is not something that is small. Then in the next 2, 3, 4, 5 years, the 10 billion, because we have people who are joining the labor force, despite the fact that we are still saying that, oh, people are not getting jobs. On LinkedIn, everywhere, we still see people, we still see companies advertising their jobs. We see how many young people, the first time are in the labor force, still trying to join workforce. What is the implication of that? The respective companies that they are working for, they get to pay them pensions. And when the remittances go to PFA. So in the next 3, 4, 5 years, there is a possibility that the PFA, asset under PFA might even pass 10 trillion as we have it now, say 15 trillion or 20 trillion. So a 5% of 20 trillion will probably give us around 1 trillion or something. So inject that into blockchain, inject that into currency, that sort of, have a lot of impact on the retail side, retail end of the capital market. We are talking about the guys who are probably looking for individual investors in that space to come and invest in mutual funds, money markets, balanced funds, fixed equity-based funds, and all of that. Then also, another threat, I don't want to really call it a threat because in the long run, we sort of see that it's an opportunity. People are just looking for one or two ways to better their lives, really. So I would just say that in the long run, because it's happening abroad now, many companies are trying to take position. They are trying to strategically allocate a portion of their assets into that space. So in the long run, maybe let's say a year from now or 2 years, depending on how fastidious SEC is, we might see some kind of rapid changes, or let's say even some funds manager, because the truth is that blockchain, cryptocurrency, they usually have their rallies. You will agree with me that a few weeks ago, you could see how it jumped from 30,000 to almost 40,000. That was a very great rally. If I should calculate the basic point, it should be around probably 500 or 600 basic points. That's not something small. So we might start seeing some funds manager that they are trying to just, in order for the people that they are managing for their pool of funds to get proper return and value for their money, they might start to look into that space too and start allocating some assets. But right now, I do not see it affecting the capital markets much because, like I said, the major funds holders, they are not playing in that space right now. They still prefer to play in the space and then the terrain where they probably are, familiar with over the years.
Thank you so much, Toyin. This was a very insightful conversation. And for our very first Nairametrics chats, thank you. This is on the right. I think normally I'll tweet. This is where we've come to an end. It was awesome having you on these tweet chats, and until we do this next time. But of course, now we have COVID. We can't even meet physically. So I think the way we'll start ending is hope everybody stays safe. Of course, continue following the NCDC guidelines. Wear your mask, maintain your distancing, wash your hands, use a sanitizer where possible. So thank you. It was awesome having you on the show.
So just before I go, I would just like to advise. I do this a lot whenever I have the opportunity like that. Despite the fact that it's still a struggling economy, people are still doing so much for themselves. They will say half of a bread is better than nothing. Despite the fact that there is no real return in investment, at least it still do you a great service if you do something with your money rather than keeping it somewhere. Try to explore mutual funds around, try to invest in safe asset classes, try to get familiar with how this industry plays, and try to get more value for your money. Because in the end, having stream of capitals actually determine the extent at which someone will be successful in life. So that is all it. Thank you for having me, David. And
thank you.
Nairametrics.